Bitcoin halving is one of the most significant events in cryptocurrency. Every 4 years, the Bitcoin network automatically reduces the mining rewards by half, slowing down the creation of new BTC and increasing its scarcity. Bitcoin has a fixed supply of 21 million coins, and halvings are designed to control inflation and drive long-term value appreciation. When miners validate transactions, they receive Bitcoin as a reward, but after each halving, their rewards drop by 50%, reducing the number of new BTC entering circulation. The Bitcoin halving schedule began in 2009 with a block reward of 50 BTC, followed by the first halving in 2012, reducing the reward to 25 BTC. In 2016, the second halving reduced the reward to 12.5 BTC, while the third halving in 2020 brought it down to 6.25 BTC. The most recent halving in 2024 cut the block reward further to 3.125 BTC. The next halving is projected for 2028 at block 1,050,000, where the mining reward will drop again to 1.625 BTC per block. Each halving reduces Bitcoin's inflation rate and has historically resulted in major price increases. But does it always lead to a bull run? Bitcoin halvings have consistently triggered some of the most significant bull runs in cryptocurrency history, as each event reduces the supply of new Bitcoin entering circulation. The first halving in 2012 occurred when Bitcoin was still in its early stages with limited mainstream awareness and institutional adoption. Before the halving, Bitcoin traded at approximately $12, but within a year, its price surged past $1,100, marking an increase of over 9,000%. This event set the foundation for how Bitcoin supply reductions would impact market prices, bringing in early adopters and speculative investors who recognized its deflationary nature. The second halving in 2016 took place when Bitcoin had gained more attention, with expanding crypto exchanges, increasing institutional interest, and growing retail investment. Before the halving, Bitcoin's price was around $650, but it skyrocketed to nearly $19,700 by the end of 2017, representing a gain of 2,900%. This cycle was driven by growing mainstream awareness, the rise of initial coin offerings, and Bitcoin's increasing recognition as digital gold. However, the rapid surge in price led to a sharp correction in 2018, triggering a prolonged bear market before Bitcoin stabilized at higher levels than before. The third halving in 2020 occurred during the global economic turmoil caused by the COVID-19 pandemic. Yet Bitcoin once again followed its historical pattern. Before the halving, Bitcoin was trading at approximately $8,500, and within a year, it reached an all-time high of over $64,000, marking a 650% gain. This cycle was fueled by massive institutional adoption from companies like Tesla and MicroStrategy, the expansion of decentralized finance and non-fungible tokens, and the rise of crypto derivatives and futures markets. Unlike previous halvings where prices surged rapidly, this time, Bitcoin followed a more gradual and sustained uptrend before reaching its peak. The question remains whether the pattern will repeat itself following the 2024 halving. Historically, every halving has resulted in significant price increases within 12 to 18 months due to reduced supply, growing demand, and increased speculation. However, Bitcoin is now in a more mature market environment with institutional players, regulatory scrutiny, and macroeconomic factors influencing its price movements. The 2024 halving, which took place in April, could mark another major turning point, but several factors make this cycle different. Institutional adoption has reached unprecedented levels, with major financial firms like BlackRock and Fidelity entering the Bitcoin market. The approval of Bitcoin spot exchange traded funds could bring an influx of institutional capital, increasing demand post-halving. Additionally, mining rewards have been reduced to 3.1125 BTC per block, and if Bitcoin's price does not rise enough to offset operational costs, some miners may be forced to shut down, reducing selling pressure. Historically, the reduction in Bitcoin's inflation rate has led to long-term appreciation, but the exact trajectory will depend on global economic trends, interest rates, institutional involvement, and regulatory developments. While past halvings have triggered massive bull runs, it remains to be seen whether history will repeat itself in a more mature and institutionalized crypto market. Bitcoin's halving cycles have always been critical turning points, and the coming months could determine whether this event will once again lead to a significant price surge. Currently, 900 BTC are mined daily. After the halving, that number drops to 450 BTC. If demand stays the same or increases, prices could skyrocket because fewer BTC will be available for purchase. In previous halvings, central banks were printing money, fueling Bitcoin's rise. But now, high interest rates and tighter monetary policies could slow down the next bull run. Bitcoin halvings have historically been a major catalyst for price growth, and many investors are eagerly anticipating how the 2024 halving will impact the market. While no one can predict Bitcoin's exact future price, analyzing past cycles, macroeconomic trends, and adoption rates can provide valuable insights into what might happen. Bitcoin halvings occur approximately every 4 years, cutting the block reward miners receive in half. This reduces the rate at which new BTC enters circulation, creating a supply shock. Historically, Bitcoin has experienced significant bull runs in the 12-24 months following each halving event. Let's look at previous cycles. 2012 halving, block reward 50, 25 BTC. Bitcoin price, before halving, $12. Bitcoin price, 1 year later, $1 to $100, 9,000% increase. 2016 halving, block reward 25, 12.5 BTC. Bitcoin price before halving, 650. Bitcoin price 1 year later, 2,500, 285% increase. Bitcoin price peak, cycle high in 2017, $20,000. 2020 halving, block reward 12.5, 6.25 BTC. Bitcoin price. Before halving, $8,500. Bitcoin price. 1 year later, $55,000, 547% increase. Bitcoin price peak, cycle high in 2021, $69,000. Each halving has led to a substantial increase in Bitcoin's price, though the percentage gains have gradually decreased as Bitcoin's market cap has grown. The 2024 halving will reduce block rewards from 6.25 BTC to 3.125 BTC, further tightening supply. What could Bitcoin's price look like after the 2024 halving? Here are 3 possible scenarios. Bullish case, 250K plus by 2025. If Bitcoin follows its previous cycles and demand continues rising, it could reach $250,000 or more by late 2025. Key drivers for this scenario include growing institutional adoption, retail adoption increasing, especially in developing economies, inflation and economic uncertainty, pushing investors toward Bitcoin as a store of value. Super bullish case, 500K plus long term. Some analysts, like Cathie Wood from ARK Invest, believe Bitcoin could eventually reach $500,000, one now's. This would require mass adoption of Bitcoin as a global reserve asset, more countries following El Salvador's Bitcoin legal tender model. A decline in trust for traditional financial systems, leading to Bitcoin becoming a true alternative. Bearish case, 100K, 150K stabilization. If macroeconomic factors such as interest rate hikes or regulations slow down adoption, Bitcoin may stabilize between 100K, 150K after the halving. In this case, the supply shock still leads to gains, but not as extreme as previous cycles. Governments impose stricter regulations, limiting institutional inflows. Market sentiment remains cautious due to potential global recessions. While no one can predict exact prices, one thing is certain. The halving will increase scarcity, and historically this has driven Bitcoin's price significantly higher in the following 1 to 2 years. If you want to maximize gains from the next halving cycle, here's what you can do. Stack BTC early. Buying Bitcoin before the halving allows you to accumulate before the supply shock kicks in. Historically, Bitcoin's biggest gains happen after the halving, so entering early puts you ahead. Hold for the long term. Bitcoin typically sees a major price surge 12 to 24 months post-halving. If history repeats, holding BTC until 2025 or later may maximize returns. Avoid panic selling during dips. Volatility is part of the game. Watch market trends. Institutional inflows could drive Bitcoin to new highs. Mining activity. A post-halving miner capitulation could temporarily shake the market before rebounding. Regulatory updates. Keep track of policies affecting Bitcoin in major economies like the US and Europe. Stay updated and keep learning. Follow on-chain metrics. Watch fundamental events like Fed rate decisions, inflation reports, and global economic shifts. Stay engaged in crypto communities and news sources to avoid missing key developments. Looking ahead, the next Bitcoin halving after 2024 will take place in 2028 at block 1,050,000. What will happen in the 2028 halving? The block reward will be cut from 3.125 BTC, 1.5625 BTC. The total circulating supply will approach 97% of Bitcoin's 21M cap. Bitcoin will become even more scarce, strengthening its deflationary properties. Each previous halving has led to a Bitcoin supply shock, followed by a major bull run. However, some factors may change the 2028 cycle: global Bitcoin adoption. If Bitcoin becomes widely accepted as a store of value or payment method, demand could skyrocket. More countries might adopt Bitcoin as legal tender, accelerating institutional investment. Regulation and government policies. Stricter regulations or government crackdowns could slow adoption. A Bitcoin spot ETF market may be fully developed by then, affecting price cycles. Bitcoin's maturity as an asset class. As Bitcoin's market cap grows, volatility could decrease, leading to smoother price cycles. Bitcoin might behave more like gold, with steady, long-term appreciation rather than explosive gains. Bitcoin halvings occur approximately every 4 years, but the exact date is determined by the time it takes to mine 210,000 blocks. Since Bitcoin block times average 10 minutes, we can estimate that the next halving will happen sometime in early to mid-2028. However, factors like network difficulty adjustments, hash rate fluctuations, and miner participation can slightly shift the timeline. Closer to 2028, we'll have a more precise date. Once block 1,050,000 is reached, the Bitcoin network will automatically reduce the block reward from 3.125 BTC to 1.5625 BTC. This means miners will earn fewer new BTC for validating transactions. Bitcoin's new supply entering circulation will drop by 50%. The total supply cap of 21 million BTC remains unchanged, making Bitcoin increasingly scarce. At this point, Bitcoin will be well beyond 90% of its total supply, leaving fewer than 2 million BTC left to be mined. This progressive scarcity has historically led to price appreciation as demand outpaces the diminishing supply. Bitcoin halvings have traditionally sparked major bull runs, but the 2028 halving will take place in a very different landscape compared to past cycles. Several key factors will influence Bitcoin's price trajectory. Institutional adoption will be at peak levels. By 2028, Bitcoin will likely be fully integrated into the financial system. ETFs, hedge funds, pension funds, and large institutions could hold significant Bitcoin reserves, further reducing available supply. Most BTC will already be mined. After 2028, the mining reward will be so small that only around 6.25 BTC per hour will be created. Compared to the 900 BTC mined per day in 2023, this drastic drop in supply could create an even greater scarcity effect. Bitcoin as a global reserve asset. Some analysts predict that by 2028, Bitcoin could be seen as a global digital reserve asset, similar to gold. If this happens, demand could skyrocket, potentially pushing prices beyond previous all-time highs. Mining economics will change. With rewards dropping to 1.5625 BTC per block, miners will rely more on transaction fees rather than block rewards. This could lead to higher transaction fees as demand for block space increases, a shift in mining power as only the most efficient operations survive. A stronger focus on Layer 2 solutions like the Lightning Network for scalability. Bitcoin's halvings have historically led to parabolic price increases, but as the ecosystem matures, several factors could influence whether the 2028 halving follows the same pattern. While Bitcoin's coded scarcity remains a key driver of value, external conditions may cause deviations from previous cycles. Adoption plateau could reduce volatility. In previous cycles, Bitcoin's price surged due to growing mainstream adoption. If Bitcoin becomes widely accepted by institutions, corporations, and sovereign entities before 2028, demand might stabilize. A matured market could lead to lower volatility, meaning Bitcoin may experience steadier growth rather than sharp, explosive rallies. If Bitcoin follows gold's trajectory, it could transition into a stable store of value, reducing its dramatic boom and bust cycles. Regulatory landscape may slow institutional involvement. Governments worldwide are increasing oversight on crypto markets, especially as adoption grows. Stricter regulations on exchanges, self-custody, and institutional holdings could limit the flow of capital into Bitcoin. If Bitcoin faces adverse regulations, the institutional growth rate may slow, affecting demand. On the flip side, clearer regulations could boost investor confidence, leading to a massive influx of capital into BTC. Layer 2, solutions and fee markets could change the game. With the rise of Layer 2 solutions like Lightning Network, Liquid, and Bitcoin sidechains, on-chain transactions may become less frequent. Miners rely on block rewards, plus transaction fees for revenue. As halvings reduce block rewards, transaction fees will need to compensate. If Layer 2 solutions dominate, the Bitcoin network's fee structure could change sooner than expected, altering mining incentives. Despite these evolving dynamics, Bitcoin's scarcity mechanism remains unchanged. The halving will continue reducing supply, reinforcing its deflationary nature and ensuring that BTC becomes harder to obtain over time. The Bitcoin halving is one of the biggest events in crypto history. Every time, it has led to massive price surges. Will 2024 be the same? One thing's for sure, Bitcoin's supply is shrinking, adoption is growing, and the world is paying attention like never before. If demand stays strong, we could witness another historic rally. What's your Bitcoin price prediction after the next halving? Drop your thoughts in the comments. Don't forget to like, follow, and turn on notifications for more deep crypto insights. Follow us on X, YouTube, Medium, Instagram, and Threads at True Crypto Insights and Crypto Tribex for podcast.